Welcome to Leaders of Tomorrow, India's only daily television platform for small businesses. We bring you the right information to empower you, the SME entrepreneur. Tonight on the show, here are snippets of an interview that I did with serial entrepreneur Ganesh to understand from him what he looks for when he invests into businesses, his tips and tricks for those looking to raise funds, as well as his advice when it comes to mentoring for entrepreneurs. Take a listen. Thank you so much for speaking with us here on ET Now. It's always interesting to be able to speak to someone who's so closely associated with different businesses, whether it's the food space, whether it's education, whether it's healthcare, and you're someone who's done it all. I want to though talk about the fact that technology is common amongst all of the businesses and all of the industries that you've invested in. For the viewers who are watching this interview, for the small businesses, the MSMEs, the entrepreneurs who are watching the show, what's the advice you want to leave them with about how technology perhaps is changing every industry in India as we speak?
No, I think we have seen a sea change in terms of the way technology, internet, online, e-commerce, and just the entire digital space has gone through. So what has happened is, from being a elitist IT kind of a mindset, this has become a core tool by which people are solving everyday problems. Entrepreneurs are solving everyday problems for the common man. So be it roti, kapada, makan, healthcare or education, we see the way technology can be used to solve the basic problems, provide convenience, provide solutions to the major pain points of the consumer. We can build great businesses. That's what we have done, whether it's Big Basket in retail, Portia in healthcare. In education, we have Avagma, Acad Guild. In food, we have Fresh Menu, Grow Fit, and Hunger Box. All of that. I think the opportunity is huge because of very low data bandwidth rates in India, internet penetration in India, falling prices of smartphones and even feature phones in India, and just internet access across tier 2, tier 3 and rural areas.
You're saying technology, you're saying internet as well as broadband penetration. But has the rest of India outside of the metros, outside of tier 1, tier 2, really kept pace with the kind of changes that you're seeing in the metros? And if not, then what should small businesses that are based here, perhaps, what should they keep in mind about building businesses that are speaking and talking to these markets?
Yeah, so what's happened now is, just over the last 2 years, partly because of forced measures like demonetization, things like private players like Jio reducing the bandwidth rates, tier 2, tier 3 cities, in towns and villages, the people are able to afford internet connectivity. Okay, feature phones costs are very low. So we have seen that happen in the last 2 years. So as I see it, the next wave of use of technology by entrepreneurs or startups would be for tier 2, tier 3 areas, using mobile internet, not personal computers, using messaging, using audio and video in vernacular languages. So that's the next biggest opportunity, not the first 30, 40, 50 million English literate urban people who have adopted so far. That's what has happened now. But the next 5 years, you would see explosion of the next 300 to 500 million people coming in from tier 2, tier 3, vernacular, using more of audio and video content to go online and consume products and services.
Okay, that's an interesting point you're making, sir. Of the 36 million MSMEs and small businesses in India at this point, 60 to 70% of them are based outside of the metros in India, and a lot of them who are watching this interview, if you were to say, look at vernacular languages, but definitely do use technology then, because even those markets are changing to respond to how technology is changing businesses that are in tier 1 markets. Is that right?
Yeah, absolutely. See, if you're starting a business today, if you're an MSME, potential MSME entrepreneur today, or even if you're an MSME entrepreneur, the biggest opportunity is how can you use technology to solve the basic problems, and especially in tier 2, tier 3 areas. If you take financial inclusion, if you take education, if you take healthcare, these are places where accessibility to quality education, quality healthcare is just not available. And the best way to bridge the gap is to use technology. Or even take agri-tech, for example. For the farmers to use technology so that their utilization is better, the yield is better, crop management is better, the storage, supply chain, transportation of food storage is done in a much more effective way with low wastage using IoT, using drones. All of that comes because of technology. I think that is the biggest opportunity for tier 2, tier 3 entrepreneurs or MSMEs to do it.
Sure.
Even if you are in traditional MSME enterprise, see how you can use technology to increase your margins, to cut out middlemen, to get better information about what's happening in tier 1 towns, reduce the delays, reduce the wastage in supply chain. All of that are possible using technology. I think technology today, whether it's mobile, whether it's internet, whether it is online access, I think it's the biggest potent weapon in the hands of MSME entrepreneurs.
So even as we're talking about technology, businesses like the ones that you invest in are also looking at the future, and at the same time, technology like AI, like cloud, using cloud computing, using SaaS, etc., is becoming mainstream for a lot of businesses. But for small businesses that are growing for the future and need to understand these technologies, what's your advice? Do they need to be able to embrace these technologies?
No, I think for them, things like cloud, for example, is a boon. If I look at myself when we started my first business more than 20 years back, between that to now, the cost of starting a business, cost of running a business, the technology cost, if you take the total cost of ownership of technology, has come down drastically because of the cloud. So while there is a mindset change, we always used to think having a server, having the computer under your lock and key is the best and the safest way. Today, top players of the world offering cloud solutions has made it possible for MSMEs or for any enterprise to use technology at a fraction of a cost with built-in redundancy, with built-in data recovery. And it's on the go, it's dynamic. Earlier we used to size it correctly and used to invest it in it. Now as we grow, we can go on investing in technology using cloud technologies. So I think it's become a great advantage and reduce the cost of starting a business. On AI and machine learning, that's a wave that's coming. Okay, right? We have seen in small ways non-technology businesses, traditional businesses adopting to it, but we are just scratching the surface. I think the utility of this is humongous in terms of reducing, again, the cost of service or support.
Sure.
We have had businesses, we have a company called Verloop, which is into AI and machine learning. Verloop is being used today by people in traditional sector. There is an aquaguard manufacturer, there is a distributor, there is a travel agent who is using AI machine learning from Verloop in order to solve their problems. That again helps them scale at a fraction of a cost which they would have spent if they had not used AI or machine learning. But still early stages, lot more to go. But on cloud technologies, there is no solution. I mean, there is no question. That's the way to go.
So technology is one bit of it, but you are, of course, a serial entrepreneur. So I want to talk about just how important or crucial investing and funds are in the life of an entrepreneur. 90% of all the questions that we get on the Leaders of Tomorrow from entrepreneurs is about how they can raise funds. What's your advice?
So I think funding is an extremely important element when you're trying to think of a startup or starting your business, because a company never shuts down for any other reason other than the fact that the funds has run out. Okay, right? If you have funds, if you have a longer rope, you can always pivot, change the idea, get a new team. You can work to do this, but if the money is over, the game is over. So I always advise entrepreneurs to think about funding well before starting. It's almost like going on a long journey in your car. You don't get into the car and then worry about the fuel. You worry about the fuel beforehand. Can you go to the next petrol station before your fuel runs out? Otherwise, you're in trouble. So what the entrepreneurs need to do is, one, determine exactly for the next milestone. Next milestone could be reaching profitability. Next milestone could be getting into market share. Whatever be the milestone, what is the funds required for the milestone, and how are you going to provide for that funding? Okay, right? Whether it's friends and family, whether it's borrowing from bank, whether it's venture capital, private equity investor, whatever it is. But first is determine the amount, and unless you have clarity on it, don't start. It's always easy to start a business, but if you run out of fuel, all kinds of trouble starts. Next question is, what kind of funding do you require? Would depend upon the business models. And each of these categories of funders we talked about have a different approach to what they would fund, how much would they fund, what risk they will take. If it's a business that's a safe business, like you're trying to buy a land, build apartments and sell those apartments, that's a safe business because it's asset-backed. That will likely attract bank funding because you have collateral of the land at which there, you have collateral of the apartments that you're building. You can pledge them and raise bank loan.
Sure.
The risk is low. The returns also will be low. So this is not, for example, a typical tech VC fundable business. On the other extreme is new age business models, which will burn a lot of money, which may be unit economics negative, which may not reach profitability, but these can scale very fast. And if they win, they will win big. Now, tech VCs like that, where there is a hockey stick growth possible. Against that, they don't mind losing the money. So they go for high risk, high return. You can't go to them with a land or apartment project because they would say, no, fine, this is a great risk, low risk business, but they are not in it to fund the same. Thirdly, when you do from friends and family, be extremely careful. It's personal money. People, whatever they may say, don't understand that startup funding is highest risk category.
Sure.
Okay, right? When they fund, they trust you and fund, and they will not understand the risk associated with it. Don't take money from friends and family unless it's a very safe business. So based on the type of funding, type of business model, risk return, seek the right investor and be clear where the money is going to come from before you start. I see a lot of people start with passion. After they start, they think that they can go and raise money, which is very difficult. Before that, you need to have a plan very clear. Just like in a long journey, you know where you're going to fill up the next pit stop going to be, next fuel stop is going to be, where will you get fuel. Similarly, you need to fund in a plan in a startup, the stages of funding. I would always encourage people to raise money when they don't need it. Okay, it's better to raise money early. Dilution doesn't matter. 100% of zero is zero. No entrepreneur ever shut down his company because he diluted too early. They shut down because the last 1,000 rupees is not available. So better to lower the risk for the entrepreneur, take funding early, focus on execution, than wait for the optimal time, best valuation, and over-optimize on valuation to raise money.
Time for a break here on the show, but much more with serial entrepreneur K. Ganesh. He is a very big investor as well into small businesses, and we spoke to him about his advice for those looking to raise funds. Take a break and come back for much more. Welcome back here with us here on Leaders of Tomorrow. Tonight on the show, we bring you highlights of an interview that I did with serial entrepreneur K. Ganesh on his advice for businesses that are looking for mentors like himself, as well as what to keep in mind when it comes to social media and building a brand as far as a technology platform is concerned. Take a listen. We talk also about IPOs for small businesses. Do you see enough small businesses that see listing on the markets as also perhaps another way to raise funds?
No, I think the government has done enough new steps to be able to make startup listable on the exchange. We did see one startup list very successfully on the alternative exchange. So I think it's emerging as a possibility. Too early to say. Why I say that is because unless there is enough liquidity in the market, unless there is depth in the market, unless people transact in the alternative exchange, buy the startup or SME stocks, we still have a long way to go. But I'm very pleased by the fact that we have had one listing already happen, and government is taking multiple steps to make it possible for startups to list and monetize, both for the entrepreneurs as well as for the investors. 5 years back, this was unthinkable, as something will never happen in India. It's great to see that initial momentum in India towards this.
On an average, how many pitches a week do you see from entrepreneurs?
Roughly around, we see about 10 a week.
10 a week. So my question to you is, what perhaps are some of the biggest common mistakes that you're seeing when someone is approaching, when a business is approaching someone like yourself to say, I want to try and raise funds?
See, I think the most common mistake is entrepreneurs, when they want to go and raise money, they have not done their homework on the potential investor. Okay, right? Look at before you pitch to an investor, do your homework. What are the other companies that invested in? What is his sweet spot? What are his hot buttons? What are his or her appetite for risk and return? All of that would help you in pitching appropriately. Okay, right? If a person has done food businesses, food sector businesses, shows their knowledge of food sector, so you can go to him with food sector. If he has done risky online businesses, that will appeal to him, which are high growth but high risk. On the other hand, we've gone for safe business. Family offices, a lot of family offices do safe businesses. They don't mind a lower return, like 2x, 3x return, but they don't want the risk of losing capital. So look at the kind of investor, their risk appetite, the sector they are focused, do the homework, and then go and pitch. Don't have a same pitch for every investor possible. I think that's a big mistake. 2, also show the investor what is the investor looking for. Why is he going to invest? Okay, right? He's appeal to the fact that you have an excellent proposition, which if he passes, does not invest, he has a lot to lose.
Sure.
Appeal to the greed. Okay, right? And how do you do that? Show how you will become a mega successful company. Talk about scale. Don't talk about low risk, because you're not approaching a bank. You're approaching an investor who knows the risk. So show the upside rather than show him the protection of the downside. That's what that's what a typical angel investor or a VC investor looks at. When you go to the bank for money, it's completely the opposite. Show how his investment is safe, how they will not lose capital. I think that's very important. Which brings me to the point saying that if you are approaching a VC or an angel investor, ensure that you are playing in large sectors, wherein that if you win, the potential of the wins is extremely high.
Sure.
The expected value of the outcome is high. Don't go for niche, small businesses to a VC or an angel investor or a tech investor. They will not appreciate it. So large sectors, which when conquered will give huge outcome. Like I mentioned, education, healthcare, grocery, retail, entertainment. Each one of them is huge. Those are large sectors, and if you win, you have big outcomes. That is what will appeal to the investor.
Okay. My last 2 questions for you, and we were talking about businesses that are based outside of the metros. A lot of feedback that we get from entrepreneurs who are based outside of Tier 1 and Tier 2 is that they don't have access to mentors. What in that scenario would you recommend for entrepreneurs who are based in places like, say, Raipur, who are saying, we don't know how to approach mentors, we don't have access to that? What should they do?
No, I think that's a very valid point. Unlike US or Silicon Valley ecosystem, whether in the Bay Area or in the Boston, here we have large entrepreneurship, untapped opportunities distributed across the country. Okay, right? And it is a fact that organizations like TIE, organizations like angel networks
Sure.
don't exist there. But fortunately today, because of online platforms, be it angel investing platforms, be it mentor platforms, it's possible for them to access entrepreneurs in main cities or in metros using virtual network. That I think is 1. 2, I think the opportunity is in Tier 2, Tier 3 areas now. Increasingly, people like me who are in the metros are seeing that metros perhaps is already saturated, or already they've had a good run. We are all seeking to go to Tier 2, Tier 3 cities. So I think in the next 3 years, you will find the propensity of people in metros, angel investors, mentors, accelerators, VCs, to be more leaning towards Tier 2, Tier 3 cities will go on increasing. But it's a challenge. It will take about 3 to 5 years before you can actually say that the Tier 2, Tier 3 cities have arrived in terms of the ecosystem like we see in Bangalore or Delhi today.
I want to talk about women entrepreneurs. On season 7 of The Leaders of Tomorrow, we've introduced a segment called Game Changers that are also talking to women entrepreneurs. Reports suggesting that only single digits is the kind of funding that's going into businesses that have been set up or are run or owned by women entrepreneurs. While the number of businesses in the total ecosystem run by women entrepreneurs may be smaller and therefore could maybe justify how much funding is going to such businesses, how perhaps would you like to see that changing? Because you've invested in businesses that are run by women entrepreneurs, a lot of portfolio companies that you have that are run by women entrepreneurs. What would you like to see changing?
No, I think that's the statistics speak for themselves. I think there is a more fundamental problem at the beginning of the funnel, be it the number of entrepreneurs number of women who are working, number of women who do technology or internet-based qualifications, number of people who are coming into the ecosystem. That itself is a very low percentage. Because of that, automatically, if you ask a VC, the number of deals that he sees from women entrepreneurs will be a fraction compared to the total number of deals he sees. So I think it's top of the funnel. I'm happy to see it changing. We have some funds which are specifically focused on women entrepreneurs, so that helps. There are a lot of events that are happening that focuses on women entrepreneurs and encouraging women entrepreneurs. We, in our own portfolio of companies, have 3 companies which are out of 12 which are run by women entrepreneurs, founded by women entrepreneurs. Freshmenu, GrowFit, Portia Medical, all of them are women entrepreneurs. So I think it is changing, but it will take a long time before it becomes statistically significant, just because the number of women coming into entrepreneurship and number of women in technology is at a lower level. If you are a women entrepreneur, my suggestion is you're in a great time and great place, because the attitudes are changing, the opportunities are changing. You just need to work harder than perhaps male entrepreneurs to be able to address some of the concerns, stated or unstated, about women entrepreneurs. Okay, right? How their life cycle is going to be, will it distract from this? All of that are actually myths. Okay, right? We have never seen that happen. We have seen our entrepreneurs go through handling responsibilities of women, be it a wife or be it a mother at home, and doing that stuff and doing it extremely successfully. My wife Meena has done multiple businesses while having the babies and doing that without any compromise whatsoever. But that attitude is changing. So lean in. You'll have to fight a bit harder. It is a bit unfair, but I think the attitude is changing and the opportunity is huge. We have seen very well that women entrepreneurs, including women CXOs, bring a lot of traits to the business which you don't have in men. Okay, right? Be it empathy, be it emotional quotient, be it the ability to take all the teams along. So there are several strengths that they have. Men also do have strengths. So that's the thing. And play to your strength. And I think it's getting appreciated, and we have seen that across the board. I mean, in companies, we have, even at CXO level, there are companies where a large percentage of CXOs, a larger percentage, is women than men. Okay, right? Obviously, in companies like Portia Medical, given the kind of industry we are in, 80% of the workforce is women. Okay, right? But that I guess is very specific to that. I think it's changing, and they need to lean in and work a bit harder.
Thank you very much for your time here on The Leaders of Tomorrow, Mr. Ganesh.
Thank you.
Thank you. That's our show tonight. Completely out of time, but if you have any feedback for us, here's how you get in touch. leadersoftomorrow@timesgroup.com is our email ID. On social media, tweet at us at Sunanda_J, which is my personal Twitter handle. You can also get in touch with us on our official Twitter handle, LOT_ET Now, or our Facebook page, Leaders of Tomorrow on ET Now. Thanks for watching. Have a good night.